very good morning and welcome to Core Finance TV for my CEO interview. I'm absolutely delighted that today's guest is Tony Durrant, the CEO of Premier Oil. Welcome back, Tony. Great to see you again.
Thank you very much. Good morning to you, Malcolm.
Good to see you. It's good to be back because we were just saying that it's over a year since you last came and a lot's been happening. In fact, I'm not even going to ask the usual initial question about can you run us through the business because I hope to, over the next few minutes, cover the key activities that you're involved in at the moment. And, you know, the theme that's been going through what I've been saying and writing about and asking you about over the last 2 or 3 years has been operationally excellent. And I would say that you've had another really strong start to the year, 1 or 2 features particularly, but I would say across the board. Your production is ahead of guidance and it all looks good. So why don't you talk me through the drivers behind the good performance?
Yes, indeed, you're quite right, Malcolm. There's always, of course, a lot of discussion about the external environment, but it's very important that we keep going within the company and continue to produce good performances, and that is the case. We had record production in 2018 of about 80,000 barrels a day, and we've been running at much higher than that in the early months of 2019. We're probably around 86 year to date, I think. So that's very good and somewhat ahead of our guidance at this stage of the year, although it's still relatively early in the year. Driven, I would say, predominantly by the Catcher field, which is proving to be an excellent field so far. Running above our expectations with very high operating efficiency. Yeah,
and that 86 is now net of the Pakistan
sale
that you
we had some benefit from some production early in the year from Pakistan. Pakistan subsequently been sold, so we will lose around 5,000 barrels a day from Pakistan, but that gave us a bit of extra production in the early period.
So how does that work through into cash flow? And you know, I know you're
well, the good news is that as the portfolio has changed, and it has changed over the last 2 or 3 years, we've been growing in the UK. In the UK, we have the benefit of tax losses, and therefore we're increasing our margin per barrel over time. We're probably going to be about 30% higher margin per barrel at the same oil price in 2019 than we were in 2018. So with higher absolute production and a better margin per barrel, something about 30% higher, we're looking to generate a lot more cash flow in 2019, and that of course is continuing to improve the shape of our balance sheet.
Yeah. So the 300 odd million you were planning for at 72 this morning, maybe even a little higher.
We hope so, yes. Still relatively early in the year and dependent on oil price. But yes, right now we're above budget, above forecast.
So I guess the key question is how do you maintain the current level of operational performance? I mean, obviously you need to extend the plateau and so on, and there are a number of different areas around the world where you're doing that. But obviously Catcher is running at 100%. I mean, how does that change?
Catcher is performing very well, close to 100%, as you say, and with no major planned maintenance this year. And therefore, you know, we're optimistic about the rest of this year, driven by Catcher. But I would also point to our Asian assets, both Vietnam and Indonesia. They have sustained us very well through the downturn in 2016-17. They generate significant free cash flow. Both of them are again outperforming. So the portfolio as a whole is performing well with very high uptime, not just the excellent performance from Catcher.
And will you be able to, I mean, we've talked about this before, and I know analysts always ask it at the meeting about whether your FPSO or the various ways that you can actually increase the production from Catcher, or is it planned that this is
yes, I think we've revised the plateau production level on Catcher a couple of times now. Originally it was 50, then 60. It's now 66. That's embedded in the commercial arrangements with the FPSO owner. I think that's the optimal production level for now. So our attention has really moved to sustaining that 66,000 100,000 barrels a day of oil production from Catcher over a longer period of time.
Yeah.
And we've got lots of options there. The reservoir from the existing well suite is performing well. We've got infill locations which we're developing, and we've got additional satellite fields, Catcher North and Laverda, which we expect to get formal development approval in the next few weeks.
Excellent. So let's pick up on one or two of the other projects that you're using to build the business, and we'll start with Towmount, shall we?
Yes.
Towmount, and how's that progressing?
Towmount's going very well. It's the next UK development project for us, as you say. We had the whole board actually out at the yard where the Towmount platform's been constructed last week, which is making good progress. Also moving ahead with pipeline work and with the amendments at the Centrica Easington gas terminal. This time next year we'll be well into the development drilling program as well, and looking for first gas in the fourth quarter of next year.
Yeah.
That's the existing Towmount sanctioned project, what we call Towmount Main.
Yeah.
About 500 BCF of gas, our share 50%. But lots of other things going on in the Towmount area as well. We have a well being spudded probably in June called Towmount East, and that has the potential to add 50% to the sanctioned reserves. That looks very good. And we've just literally completed in the last few days a large seismic survey across the whole, what we call the Greater Towmount area. There are a number of other potential prospects to be worked up over the next few months for future drilling in the Towmount area. So I expect not just Towmount to be a good project in its own right, but I think it will become a hub for a much broader area in that area of the Southern Gas Basin. It's well connected into Easington, so we're looking forward.
Prices are good. Yeah.
Price okay. I mean, we've had a warm winter, Caribbean almost.
Yeah.
But equally, the year before, you might remember the beast from the east, and gas prices hit 150 pence a therm. So prices will go up according to the weather and down as well. But long term, Towmount is very economic. We tested the project, I would say, down to
very much money to
20 pence a therm. We acquired it cheaply at the bottom of the market. So the Towmount area looks very good.
Excellent. Right, we'll move across the continents now, because I know, actually I remember you telling me that your rocks guys were very keen about Mexico.
Yeah.
And probably way before, well, certainly before most other people were. And you actually got into Mexico quite a lot earlier than most. And I know you've participated in rounds and things since then.
Yeah.
But you've been proved right about that. So let's wander through the timeline and see how it's going to look there now in Zamora.
Yeah, so we're in the appraisal phase for Zamora now. The midpoint estimate for Zamora following the discovery well was about 600 million barrels. It's shallow water, so it looks like a world-class project. Results from the appraisal program so far have been very good, encouraging. We've had 2 wells effectively and a production test. Look as if we may be able to, on completion of the whole program, revise our resource estimates upwards, although we have a 3rd well which we drilled the top hole section already, so we should be drilling ahead actually later this week, probably Thursday. And that will complete, I think, from our point of view, the appraisal. That 3rd well is in the southern part of the reservoir. So
is that a straightforward well, or will that have a sidetrack as well?
We'll consider that. At the moment, additional production testing, additional sidetracks are contingent. We think that may not be necessary given the results we've had so far. So by mid-year, I think, we should have a pretty full view of the Zamora structure. And of course, in parallel to that, we're also starting work on the development planning and actually expecting some feedback from the engineers on their proposals for the development concept around about the same time. So Zama moving ahead nicely.
So moving, and as you said, moving the resource estimates to the right-hand side, making them bigger, and I mean, this is quite a valuable asset now. I mean, do you ever get people pitching up to you saying, would you like to sell this to us? And
yes,
it could be a significant deleveraging event, as you might call it.
You know, the North American industry, particularly US companies, were really looking the other way at the time that Mexico opened up. It's interesting to me that 3 UK companies at the time, Ophir, Cairn and Premier, picked up probably more acreage in Mexico than the rest of the US oil and gas industry put together. But over time, I would expect US companies to move into Mexico. So I do think there'll be some interest in our Zama asset. Of course, on the other side, an asset like Zama, 150,000 barrels a day gross production, shallow water, low capex, low opex, would be a very valuable asset, long-term asset for our portfolio as well.
Yeah. It's time to look at sea lion.
Yep.
I've been, as you know, I've been very keen on sea lion for a long period of time. I know there are still believers and non-believers and everything else, but for me, it's always been in Premier's, in my view, in terms of Premier, it is such a key player for a substantial amount of volume and profitable volume in the mid-20s and in the next decade. As I understand it, things have been going slightly to the right in terms of timing at the moment, but actually, like the Swan, it's all going on, below the water, and there's a lot of activity. Why don't you take us through how the project is moving forward?
I think you're right, by the way, and I, of course, would agree with you about the long-term potential of the North Falklands Basin, not just on the Phase 1 project that we're currently working on, but if you look out further, I think there'll be multiple phases of development in the North Falklands Basin. Inevitably, first oil, new basin. There is a lot of work to be done, and it's perfectly appropriate, I think, that we do all we can to mitigate the risks of new production in a new area, and that is a lot of the work that's been going on. We've finished the technical optimization, finished the technical description of the project, but we are still cost optimizing in a number of areas. The other main activity, of course, is on the project funding side. As you know, we've gone for project finance. We're putting together an information memorandum, in effect, for various funding sources. And we've got independent reports on every aspect of the project: the engineering, the subsurface, the environment, security, the oil marketing plan. All of that work takes some time, is being done, is coming to a head, and within the next month or so, we'll be submitting those reports to funding sources for their review. It goes without saying that we've been discussing the subject with them for some time, and I'm very comfortable. I think we're getting good support for the project all round, actually, from the contractors, from the governments, both Falklands and UK, and from potential funding sources. So I'm very encouraged.
And it's optimistic to see that you are getting that support. And I noticed that where there have been delays, it's only been because people needed to have all that information put together, and actually putting the information, put it this way, submitting all that information and data together. It could mean that it still wouldn't be out of the question to have an FID at the turn of the year or
No, I think that's right. I mean, of course, it wasn't appropriate to move forward with a large development project at low oil prices in 2015 and 16, nor indeed given Premier's balance sheet at the time. As every day goes past, our balance sheet getting stronger, oil prices seem to have stabilised. And that puts us in a much better position to go ahead with the project.
And you've always said that you will bring another partner in at some stage, and I imagine that will happen much more readily once you've got all this in process, and people are saying, actually, I'll wait and see till they get the funding and everything else. So followers of Sea Lion and the Falklands can rest assured that everything is being done possible in it, and you remain pretty optimistic. But, yeah. Now, you mentioned the low oil price, and fun enough, that was one of the things I wanted to talk about with regard to your exploration portfolio, because 5 years ago, quite a lot of exploration departments were being cut and changed, and I know that you had some very serious and difficult moments, because at the time you had the double whammy of debt and everything else as well. But you seem to have overhauled the department with remarkable ease. Certainly not the right word to use it, but you've come out of all that, the $29 oil, where are you going to go to from here, the various different prospects and projects that we've talked about, with a pretty exciting exploration development.
Absolutely. I'm biased, of course, but I think it's the best portfolio that we've had at Premier in my time in Premier, which is stretching back a few years now. And I should give absolute credit to our guys who, through a difficult period for exploration right the way across the industry, they did a fantastic job in developing the portfolio, but also exiting those parts of the exploration portfolio that we decided not to go ahead with.
Yeah.
So we've fine-tuned it. We have very good prospects in Mexico, in Indonesia, and in Brazil. Those are the ones that, as Premier, can invest in exploration going forward. We'll be focusing on, and I think actually there are, on the new venture side, not something that I can sort of be specific about today.
Yeah.
But because the North American industry has focused so much on its domestic business in the last 24 months, I think that has left some opportunities on the international side for companies like us to pick up new acreage.
So, as I see it, there are exploration opportunities within the portfolio where you're already producing.
Yeah.
And I'm quite surprised that you still went ahead with Brazil, because I thought that would have been an easy one to let go.
It's a very exciting opportunity, maybe it carries a 1 in 4 risk, and maybe we've been a bit spoilt by Mexico, where our risk assessment would be lower than that. But by historical standards, 1 in 4 very meaningful volumes would be an exploration risk that the industry would have taken.
And you're running that from down there, or are you still?
Yes, we've got an office in Brazil. As we move into the drilling phase, we're still planning for 2020 drilling. 2020 is shaping up to be a very good year, a very interesting year from a drilling point of view. We would like to drill in Brazil. We'll be drilling in Mexico, I hope, on the other block.
New block.
The new block. And also potentially in Indonesia. Our Andaman area in Indonesia is very exciting. So 2020 could be a big year for exploration as well. Right,
now, you mentioned the Americans.
Yeah.
And at the start of the year, there was some serious speculation that you were going to do a big, and when I say big, not just transformational, a huge bit of business in the UK North Sea. That's died down now, but people will obviously want me to ask what that was all about. Are you still involved? Are we... Should we stand by?
If you're referring to Chevron, Malcolm, that's been in the newspapers, we are not progressing the Chevron acquisition. That went elsewhere. Yeah. But the reason for us looking at a UK acquisition still very much exists today. We have a good group in Aberdeen who've done a great job on Catcher, are doing a good job on Towmount, and I think looking forward can manage more projects. We have some synergies, I think, in the North Sea in terms of our operations. Of course, a lot of people talk about our tax synergies as well, and that's valid. We have $4 billion of tax losses. That is a latent asset, I would say.
Probably.
And if we can use those tax losses more quickly by adding to our producing asset base, that's very much adding value for Premier. So the reasons are still there. I think there will be lots of other opportunities in the UK North Sea, mainly still driven by the fact that the majors and some of the North Americans are no longer focusing on the UK North Sea.
Yeah.
So we're encouraged, we're still looking, but we will be disciplined. Those tax losses are worth something to Premier and its shareholders, and we're not going to hand them over.
No, exactly. And what is more, when you're going up against Ineos or Cresceo or whatever it happens to be, you know, it gives you a very reasonable economic stick to beat them with, and there's no reason why you shouldn't. I mean, you know, if the people who are lending you the billions are happy to look at it and say, you know, it adds to the process and makes you more profitable and you're paying off more, and then it's fully understandable.
I think we've been very encouraged by the discussions with the various funding sources.
Yeah.
But the onus on us, of course, is to maintain discipline and bid only what we think we can make work for Premier.
Quite right. Our time always goes through very quickly. You're never going to believe this, but we've done our sort of allowed time. I think that we've managed to get through most of the really key bits that comprise Premier at the moment, and how well you're doing. So, you know, really, you know, sort of, I'm confident that the marketplace is doing the right thing by backing. I don't think the share price in you and a number of other stocks have yet taken on board the fact that at $72, the marketplace for oil and gas shares should be higher. But I think, you know, it is a great job. The usual thing at the end is, you know, and I look back at last year's interview, and you've delivered pretty much everything you said. One or two things take a little longer than you expected. Where would you like to see Premier in 12 to 18 months' time?
Well, I think it still goes back to repairing our balance sheet.
Yep.
Balance sheet is in much better shape now. Debt by the end of the year should be below $2 billion, and the leverage test should be around about 2.5, which means that our absolute size of debt is a lot less than a number of our peers, and our leverage ratio is back in the middle of the pack, I would say.
Yeah.
But you know the way the world works, sometimes you have to overshoot to prove the case. So debt reduction still remains a priority. There is a lot we can do in the producing asset portfolio. We talked at our results about incremental infill drilling that can still add a lot of value and create cash flow in the very short term. The project portfolio, we've touched on it, Zamora in Mexico, Sea Lion, and the exploration story. There's lots for Premier to work on. What we need to do is to make sure we're making the right capital allocation decisions, make sure those projects are absolutely well set up before we sanction them. And then that will, in time, of course, give us lots of growth going forward as well. But we'll make those decisions prudently. The immediate focus is still on getting the balance sheet in shape.
Well, you should be very pleased with the way it's been going. Thank you very much for joining me again
pleasure,
today.
As always, Malcolm.
Today's guest has been Tony Durrant, CEO of Premier Oil, and I've been Malcolm Graham-Wood. This has been Core Finance TV CEO interview slot. Thank you very much for joining us, and see you again soon. Bye now.